Let's talk about down payment assistance options for Arizona, because no money out of your pocket sounds amazing, right up until you realize that sometimes it means money later with a whole lot of paperwork. So today we're going to break down how DPA works in Arizona, the pros and cons, the upfront costs that people often forget, and how this can affect your equity in the future. Now, I'm not a lender, I'm not a CPA, so always verify any information because program rules and guidelines can change very often. Down payment assistance in Arizona is usually not a magical briefcase full of free money.
Dollar bills, y'all.
It's a structured second loan, a silent second, that helps cover down payment and or closing costs. Your mortgage is typically two parts. First mortgage, the main loan you make monthly payments on, your principal and interest, and your second lien, which is the assistance, is often 0% interest, no monthly payment, but it is recorded against your property.
Write that down.
Here's the most common setup you'll see in Arizona programs. A 30-year fixed first mortgage paired with DPA as an interest-free second mortgage, often with no monthly payment, and it may be forgivable after a set period, commonly 3, 5, 7 years depending on your program. An example structure you may see, assistance of around 4% of the loan. In Maricopa County, you'll see programs that describe multiple second lien options, which may be forgivable timelines and sometimes amortizing versions. An important note:
now listen to me very carefully.
If you sell or finance before the forgiveness period, many programs require you to pay back the DPA second lien. So why do buyers love down payment assistance? Because it can be the difference between someday owning a home and this year owning a home. Now, some of the advantages of a DPA program is lower cash needed to close, no down payment or closing costs coming out of your pocket. This also helps buyers who have a solid income but haven't quite saved enough yet for that down payment. This also can be a great savings for your emergency funds, which matters a lot, especially in Arizona, if it's July and the AC goes out.
I'm baking like a toasted cheese here. It's so hot here.
This is your survival situation, and if you have only limited funds, this can be a great help. So let's talk about some of the cons to down payment assistance and what's in that fine print. DPA is helpful, but it's not free money in the way social media might want you to believe. First off, you might get a higher interest rate. Some DPA programs trade lower upfront cash for a slightly higher interest rate or specific pricing. So the question becomes, does the math still math?
Wait, what?
I would encourage your lender to give you a number of comparisons in different programs. Number two, the down payment assistance can reduce your flexibility later. If you might refinance or sell your home within a few years, that second lien payoff can matter. Some programs forgive after a certain number of months, but leave early and you may owe it back.
Did not see that coming.
Number three, equity and net proceeds. Down payment assistance usually does not stop you from building equity, but it can affect how much cash you walk away from when you sell, because the second lien may need to be paid. A side example is if you sell your home for $30,000 after costs, but you still owe $12,000 on your DPA lien payoff, your net is now only $18,000. Number four is your qualification rules. Down payment assistance often comes with program guidelines, income limits, homebuyer education, occupancy rules, and lender participation requirements. Make sure you know what you're walking into. Now, even with down payment assistance, most buyers will still need some money up front to get the deal done. What commonly will show up is earnest money deposit. Now, when you put in a contract offer and it's accepted, you'll have a certain amount of time to put down your earnest money, which is basically your promise to commit into this process. You'll need to pay for your inspection. Do not skip the inspection no matter what somebody tells you.
Don't be fooled, man.
It could be a super hot market. My advice is always do an inspection to at least know what you're getting into, even if it's irrelevant to closing the deal and you're not going to ask for anything. You want to know what you're getting into. Appraisal costs. Sometimes you'll need to pay this up front. This is something you'll talk to your lender about. Make sure you know what the ins and outs of this are and whether you're on the hook for it. Prepaids. Your homeowner's insurance, prepaid interest, property taxes. All this stuff may need to be paid ahead of time or part of your escrow account, so just know where this is going. Lender, title, escrow fees. Some of this could be offset by credits, but not always. So again, you need to really read the fine print. Ask your lender a million questions, as many as you can come up with. Know what you're diving into before you go signing any paperwork. The next part is something I wish every buyer thought about before choosing down payment assistance. What is your time horizon? If you think you're going to move in 2 to 3 years, you need to be careful because down payment assistance structures are forgiven only after a certain timeline. What are your refinancing plans? If rates drop and you want to refinance, check if you'd have to reapply or repay the DPA second lien at that time. Your cash reserves. Sometimes paying a little bit more upfront or negotiating seller credits can beat taking a higher rate down payment assistance option.
I like it. That's genius.
But if you have thin reserves, DPA can protect you from becoming house poor and not having any cash for things that may come up right after you have purchased. Your equity strategy. Equity is built by the principal paydown, your appreciation, and your smart improvements. DPA doesn't cancel this. It just adds a second lien that you have to move around. So in the long term, you really need to focus on what your goal is and how long you're going to stay in the home. In the Phoenix area, the average is 7 to 8 years. So see if that coincides with the DPA rules and what you're going to owe should you beat that timeline. So to recap on down payment assistance, here's where it's a strong fit. You have a stable income, but you have limited savings. You plan to stay in your home long enough to satisfy any forgiveness terms, and you need to preserve your limited reserve funds. It might not be a good idea if you're planning to sell or refinance soon. If you can qualify for better terms without it, that may be a better option. Or you'd rather negotiate seller concessions and keep your loan structure much simpler. If you're looking in the Arizona area and want to see what you might qualify for, let's run some real numbers and we'll decide whether down payment assistance could be an option for you. I'll connect you with a number of different lenders that can also get you the fine print so you know exactly what you're getting involved with down payment assistance.